One subject I get lots of questions about these days is home loans. How challenging is the environment out there, and what does it take to qualify these days? Long gone are the days when one simply had to fog a mirror in order to get a loan. Why, I think even Lily here got a loan in those days. 0 down, neg am, even with these ears. If you're thinking of buying a home, you shouldn't let the current mortgage environment scare you away, especially with interest rates in the low 4s. Joining me today to shed some light on the mortgage environment and current loans available is Matt Young, loan officer with MDC Financial. Thank you for being here today, Matt.
It's a pleasure to be here.
Well, most people have the sense today, Matt, that the mortgage environment is pretty challenging. Just how challenging is it, and are people getting loans?
Well, it's more difficult than it was 4 or 5 years ago, but it's not as difficult as most people think. Really, the main thing is that borrowers need to prove that they're qualified for the loan that they're applying for. And one of the things that underwriters are looking for is that you've got stable income, and they're going to look back over a 2-year history to capture all the fluctuating income the borrower might have and average all the income together and come up with their definition of income.
What about someone who is self-employed? Can they qualify today?
Absolutely. Self-employed people could always qualify for a loan. The difference now, compared to, again, 4 or 5 years ago, is that we have to go with the tax returns and either the Schedule C or Schedule E income for that self-employed person. If they have a lot of write-offs and they have a very good tax accountant and write off all of their income, there's not going to be that much income left to work with in order to qualify that person for a purchase.
The fact is, most people don't have $60,000 sitting in a bank account so they can put 20% down on a $300,000 condo. What lower down loan options are available for people?
Yeah, one of the best low down products that we have available still is the VA loan, Veterans Administration loan, for all military eligible borrowers. That allows for a 0 down payment. It also allows for no monthly mortgage insurance premium that they're paying. So they can get in with 0 down and no mortgage insurance on a monthly basis. Another low down loan product that we have is the FHA loan, which allows for a 3.5% down payment. The interesting thing about FHA is that they will allow for any amount of family gift money that a borrower can bring to the table with no limit. So you could have Aunt Polly bring in your 3.5% down. FHA will also allow the seller to cover closing costs to the tune of 6% of the purchase price to go towards those closing costs. So a borrower really, when you look at their own funds, can get away with a 0 down payment using Aunt Polly's money and the seller's money.
I think it's important to point out that if you're going the VA or FHA route, while most homes will qualify for VA or FHA financing, provided they're not in really bad condition, if you want to buy a condo or a townhome and use VA or FHA financing, they actually have to be on the approved list. And unfortunately, the majority of condos and townhomes in San Diego are not VA or FHA approved. There are some out there, but it's important that you work with your realtor and with your lender to identify the right properties if you are planning on buying a condo or townhome with FHA or VA financing. Now, one misconception I've heard a lot, Matt, is people think you have to be a first-time buyer in order to use the FHA loan, but that's not true, correct?
No, you just have to plan on occupying the residence that you're buying for FHA. Another low down product is the HomePath loan. HomePath is a loan program that was designed by Fannie Mae to help liquidate the inventory of foreclosed homes that they now have in their portfolio. And homes that are listed on homepath.com are eligible for these special programs. Basically, it's a 3% down with no mortgage insurance requirement and no appraisal requirement. Furthermore, Fannie Mae, in some cases, will pay up to 6% of the purchase price to go towards the closing costs.
We hope you found this brief overview of the current lending environment helpful. I always advise my clients the first step if you want to buy a home is to get pre-approved, and a great lender like Matt is worth their weight in gold. They'll help you navigate the complex loan process, they'll be up to date on the guidelines, and they'll make sure nothing derails you so you get to move into home sweet home.